Good afternoon, everyone. Thank you for joining us today. We're going to give people just a couple minutes to join, and then we'll go ahead and get started. In the meantime, if you have any questions for us, my name is Robin. I'll be monitoring the chat as well as my email, Robin, ROBYN, at strategyleaders.com. If you have any questions, feel free to shoot them over, and we'll be answering them later. Thank you.
Good morning, folks, or good afternoon. Robin, let's just do a sound check. You can hear me okay?
I can hear you. We're good to go whenever you're ready.
Okay, great. So we're going to start with some intros and give you a little bit of information about the team here at Strategy Leaders and give folks a few minutes to gather yet. Strategy Leaders is focused on the growth and development of privately held businesses. We've been at it for 30 years. We started based on research that was done at Columbia University and working with an American economist and business historian who was looking at how to build a successful US-centric 21st century economy based on boosting the profitability, survivability, and the ability of companies to perform in the privately held marketplace. As a company, we've had experience across dozens of industries. We work nationwide, north to south, east to west. Our specialty is working on growth, profitability, exit, and planning for the businesses that we work with, which includes helping them to do acquisitions when it's appropriate. We really focus on strategic thinking that is practical and geared to solving real world business problems. And in terms of the ways that we can help, on the left you see some of our products, and on the right you see some of the areas that we work in. So we provide companies with valuations. We can do key performance indicators, KPIs, develop forecasting, and do what-if modeling. We focus on building growth plans at the right time and at the right place for businesses that need it. And we also work on transition planning and implementation as companies look at going through changes in ownership and leadership. On the right-hand side, that includes a lot of work that we do in terms of management team development, executive coaching, owner coaching, working on advisory services on either the buy side or the sell side, so getting the deal over the finish line. What we found is the challenge is not getting a deal started, but it's actually completing it, which does not happen in something like 90% of the cases. In our case, we get deals done virtually every time we work on them. And we do a lot of next generation training and development. We are in fact a next generation company. Robin is part of the next generation of the company and is taking over and growing and developing her role in the company. So we know exactly what that's all about from a practical as well as from a technical point of view. Now, In terms of today's webinar, we really want your input as well. So please give us input. Tell us what you're thinking, what's on your mind. Use the chat window. Send an email to Robin at Strategy Leaders or Andy at Strategy Leaders. If you want some follow-up afterwards, let us know. We're happy to be book an intro call with you. Let's make sure that we're in connection in this webinar and then after this webinar as appropriate. And with that, I think we're going to get started. Robin, should we get started or should we wait a little bit?
I think we can jump in.
Okay, great. So we're going to talk about 4 gateways to success today, which includes learning how to spot hidden profit leaks, dealing with 3 common traps that small businesses get into building a 3-part system to reset revenue and cash flow, and learning how to see the future clearly. When we talk to business owners about the challenges they're facing, a lot of what we hear is that the future outlook is too cloudy, the sales aren't where they need to be. Business owners often complain that they feel like they're living on the edge day to day, week to week. They're worried about things they can't control. They feel like cash flow is unpredictable. Many find that they're trying hard to get out of debt, but they keep sliding back in, and they're not sure if they're profitable or profitable enough. And these are the kinds of challenges that we help our clients deal with all day long. But I would like to make the comment here that the real issue is shifting from reactive to strategic leadership. So on the reactive side, a gut decisions, a hero complex, firefighting, unclear expectations, versus the strategic side where you're looking at longer term planning, team ownership, clear metrics and accountabilities. And most business owners, they start out in the reactive mode. It's how they survive the early stages of the business, but they get stuck there, and trying to make that shift to strategic is a 180-degree change. And that's where strategy, not just hustle, starts to matter for them. We're going to talk about this as part of the themes throughout today's webinar. So now let's talk about setting a course to move forward and not allowing the business to drift. Most business owners, when you look for things like hidden leaks, which is what we're going to talk about next, admit that they lack control and clarity. They can't grow at the right pace. They get stuck with a bottom line they don't like. They don't understand what's driving the losses and gains, and they struggle to get an accurate picture of what's going on. So let's dig into that a little bit. When it comes to hidden profit leaks, size, margin, and growth are your big drivers. Size matters, and you have to understand the drivers, whether it's looking at the business at a very small early stage, bootstrap, $500,000, getting to $1 million, getting to $2 million, getting to $3 million, and continuing to grow in hurdles up to $20 million. Each stage of growth and development has its own challenges, and you need to understand what those challenges are. When you're going to have enough money to work with, when you're going to get caught in a trap. You need to set ideal growth rates for the business, and typically businesses run from not enough growth to too much growth, and then they get stuck trying to digest it. You need to stabilize that. We recommend a 15% growth rate when the business is under a few $1 million in revenue, slowing it down to 10% growth rate as the business grows in size. You need to learn how to perform consistently, and that means driving not just the revenue growth rate, but also the profit growth rate. What we recommend is building a model where you can double revenue and triple profit year after year. And then once you've got the picture, you have to learn how to perform consistently within that picture. Some of the tricks to doing that are to go through and identify your best and worst customers, figure out who makes you profits, and use that as a model for who you're looking to grow in the future. You need to back up sales with effective marketing. That's something that Robin is a real specialist at. And if you feel like your pipeline isn't full enough, I would recommend that you sign up for a conversation with Robin to talk about where you are and what options you might have to change the outcomes. On the expense side of the business, you've got to include everything that's relevant in cost of goods sold. So many times when I'm talking to business owners, I see that they don't really have a good picture of cost of goods sold. And that's a shame, because cost of goods sold varies differently as the business grows from the expenses and the overheads, and they don't really have a good way to control either. You want to make sure that once you do understand cost of goods sold, that you set your gross profit target high enough. A lot of businesses are trying to make money at under 40% gross profit all in, and that's just not going to be good enough. Anytime that you get down to 40% or lower, what you're going to find is that you're struggling constantly to make enough money. You do also want to control overhead. So by getting all of the cost of goods sold effects out of overhead, then you want to look at 3 to 5% maximum year-over-year expenditure increases, and then also isolate what you need to grow in terms of capital investments in the business. You want to expand with your payoff clearly defined. So when you make investments in capital, then you have a clear understanding of what it is that you're going to get out of that ahead of time, rather than living in hope that maybe it'll pay off if you spend the money later on. You do want to also make sure that you're planning your way out of net income, taking into account all of the balance sheet effects. Most business owners really don't see what's happening with paying for principal on the balance sheet, investing in having cash reserves so that the business doesn't go through crunches. And lastly, I would say that anything below 0% after paying for debt, savings, taxes, shareholders, rewards, and reinvestment, which are all the balance sheet effects, should lead you to some red flags and some rapid planning on what to do about it. If you're not sure what to do about it, come and talk to us. This is the stuff that we deal with all day long. Now, in terms of building the business, this is clearly a for-profit business, and most business owners, I think, need to do more about demanding that it perform that way. Some of the common financial traps that business owners get into is they keep trying to get ahead and slide back by making decisions on inaccurate information. They can't see enough about what's coming, and that makes it hard to get ahead of the curve, and they don't have enough control. So let's talk about why this happens and what to do about it. In terms of common financial traps, you need to make decisions on accurate information. Get the financials organized. As I said earlier, isolate cost of goods sold. Hire someone qualified to manage the books. So many businesses hire someone who is doing bookkeeping somewhere else, kind of learned on the job, doesn't have any or enough accounting training, and they're getting into deeper and deeper trouble as they make errors in how entries are made in the books, and they don't have someone who can actually contribute to cleaning that up. Make sure that you are using both cash and accrual reporting. So cash is what goes in and out of the checkbook, but accrual is what's happening in terms of invoices and expenditures, whether you've paid for them or not. And those can be two very different pictures, and you need to understand the difference between the both. Know the facts, know how much profit you're making, how much, when it happens. We have a number of businesses that we work with that go through cycles throughout the year. And we've got to make sure that we are reserving enough money for the low cycles and driving enough profit in the high cycles, so that we've got a stable performance across the year's platform. And also that we've got tools in place to help manage through the low points. So having a credit line in place, having cash reserves to manage through it. You also want to make sure that you isolate your products and services. So profitability, if you have more than one product, more than one service, profitability is not driven on an overall basis. It's driven by looking at each different product or each different service and how much you are spending or earning on each one of those. Now, the third common trap that you need to be looking at is how to get control. And one of the first places is curb your accounts receivable. You are not a bank. It is not your responsibility to manage your clients' cash flow. And so you want to make sure that you set terms with clients that limit your need to finance their business. If you have concerns about how to do this, again, talk to us. We've been very successful in reducing the outstanding accounts receivable and changing the terms with clients over time. You need to think about auditing your books. Every year, we hear lots of stories about how someone in the business has stolen money, misused money, misallocated money, and these are the things that cost the business owner hugely. So consider doing an audit. Most business owners say, I don't want to pay for an audit, it's too expensive, but the amount of money that goes out the barn door can be significantly greater than that. Make sure that you are getting rid of any boat anchors in the business and be ruthless about that. Whether that's people who have outstayed the time that they should be there in the business, people who need to get on with learning and you need to help them with that so that they can contribute more. Now, vendors who are no longer meeting your needs, and clearly customers who are the future, not the past of the business. Make sure that you use leases and longer term loans to protect cash. So most business owners make the mistake of laying out too much cash in lumps, and they want to not have to pay interest, but the cost of interest is the cost of doing business, and it allows you to manage cash flow more effectively. And then finally, as you focus on the net income picture, make sure that you have a disciplined picture to paying down debt and building up cash. So $1 to debt, $1 to cash. Again, most business owners make the mistake of saying, look, I'm going to pay down my debts first, get debt free, and then I'm going to start putting money into cash reserves. And what happens is that the bank does not prioritize the company's financial picture in the same way. They actually value cash as twice as important as debt reduction. So make sure that you know how to play that game. Then when it comes to the third common trap, make sure that you can, the next common trap, make sure that you can see what's coming. Make sure that you're looking forwards, not backwards. Learn how to forecast with accuracy, so that with accuracy is something that most business owners find a challenge, and that's something we work on with every client of ours. And we find over time that we're actually able to get them a very accurate picture under varying conditions. Make sure that you build a budget and use it. If you have QuickBooks, it's easy to build a budget in QuickBooks. If you don't know how to build a budget, again, reach out to us. We'd be happy to help you. And once you have reports in place, then learn how to turn those into graphs. We have a beautiful dashboard product that we use with all of our clients. It's about 40 pages of information, and it allows us to see how things combine and compare. And it helps the client to get a control over what's going on, and then also turn that into forecasting. Make sure that you do prioritize analysis. I think most clients do not have enough analysis or analysis experience on their team. Make sure that you have someone on your team who's capable of doing the analysis, and then get help to do what you don't know how to do. I don't expect that you know how to do everything. I do expect that as you grow the business, you'll increase the scale and scope of what your team can do in order to support you. Now, the last thing we want to make that in terms of a trap is beefing up planning. And I would say that one of the challenges is making sure that you're planning way ahead. I was just working with a client this week, and we're building the sales team, but we're now looking at filling a gap that's right in front of us. And what needed to happen, but we couldn't get to it and couldn't figure out a way to get it done, was to build the plan a year ago. Now, if we go back and replay it with this new client, what we can show them is, here's where they could have been working on planning a year ago and how that would have contributed to not being up against a wall. That said, if you are up against a wall, there are ways to get out of it. So now you have to look at acquisitions, you have to look at beefing up on resources, and you have to look at top clients or top products that can drive you forward quickly, and how to make sure that those go to market effectively. You want to look at relationships and trends over time. That goes back to the analysis and the ability to see what's happening through dashboard or through graphs. Make sure that you are setting goals. That comes out of the budgeting and forecasting process, setting goals with individuals and with teams, and then holding people accountable for delivering on those goals. I would say that goals should not be set as a top-down, but rather as a team approach. And then as you work on these tools, also evaluate the need to expand or diversify the business. So are you in the right marketplaces? Do you need more geography? Do you need more products or services? Do you need more talent? These are all questions that can be answered with an acquisition, and it's relatively easy to get acquisitions done. Most business owners just aren't comfortable with that strategy. So learn how to get comfortable with that strategy. And finally, invest to grow your way forward profitably. So most business owners, when things get tight, they will cut their investments in the very things that are going to drive them forward. Make sure that you're building up your sales organization, building up your marketing, building up your cash flow to deal with capital investments, reserves for security, and also then building up a CapEx budget so that you know what you're going to have to spend in order to get more profitable and productive as time goes on. Now, when it comes to the top 3 metrics, I recommend that you look at sales versus goals, gross profit percentage, and cash on hand. If you can get control and comfortable with those 3 metrics, everything else will start getting easier. Now, what we're going to go look at next is building a 3-part system. And as we dig into that, some of the challenges that I hear business owners dealing with there, the year falls short of expectations. They're dealing with leftover losses. They're struggling with expense spikes, and emergencies turn into crises. So for example, we have a client we picked up recently, we've been working with for a little while now, and they were exactly dealing with that challenge of leftover losses. And what we did for them is we helped them organize the finances so they could go out and get some capital so that they could spread the hole that they were in out over time and pay it down over time, rather than just staring at a hole that they couldn't climb out of. If you don't know how to climb out of that hole, definitely come and talk to us. Now, in terms of the 3-part system to reset, first of all, define the game you're playing. And this is a 3-year plan. Where do you want to take this business over the next 3 years? If that's hard for you to get down on paper, get someone to help you with it. Again, those are the things we do. Decide what's essential for that 3-year plan and then minimize everything else. I would say that many business owners live in the land of, but I could do this or I could do that, what I call the shiny toy syndrome. And those things are distractions, and you aren't going to get everywhere you want to do without complete concentration and focus. Learn how to use a budget and a forecast. I've talked about that already. And then once you have those, evaluate how you're doing against the monthly, adjust your plan quarterly if you're off track anywhere. Make sure that you do get help refinancing debt. Refinancing debt is a very complex problem today. It's very frustrating. I wouldn't go it alone. You have to know where to go to get the financing, what routes to take, how much you need, what you can get your hands on. All of these are questions that advisors can help you with. If you're looking to refinance debt, come and talk to us and we can refer you to some very good people with very reasonable costs for helping you through that process. And make sure you're disciplined about what to take on. As I said earlier, stick to the plan, stay focused, make sure that you're taking on the right things that are going to serve that 3-year plan. When it comes to a 3-part reset, the next piece is the revenue growth team. And when it comes to building a revenue growth team, I recommend that you start with quality delivery. So you set yourself aside or apart by delivering quality products or services and then being able to charge a premium for that. Make sure that you're using your customer sales team as a sales opportunity. The large client that we have, we've worked with them for quite a while. When we started with them, the customer service team was just there answering questions. They didn't know that they could or should play a role in asking, but what else can I help you with? What else do you need? Where are you going? And gathering information that they could then use to either pitch additional products or services or flip that information over to the sales team to work on. Many customers overlook the resource of their customers' customers. So if you're serving a need for a customer, look further down line. What do their customers need? Why are your customers buying what you provide? And then using that for them to provide downline to their customers. Figure out if there's a way that you can reach into their customer list. You can go on the website and see who their customers are. You can look them up on LinkedIn, start a dialogue there, and see what kind of untapped resources might exist. Make sure that you're filling every stage of your sales pipeline, from the introductions of people into the pipeline to gathering information about their needs, documenting what they need, building proposals, and then actually asking for the business. Well, I find that a lot of times companies focus on filling the pipeline at the proposal stage and trying to deal with that too early, and they don't get enough results out of the pipeline because of that. So also make sure that you have multiple stages in your pipeline. Make sure that you're tracking performance with people who are working for you and rewarding results, and that you understand the difference between hunters and farmers. We have a client right now, and she's for years been trying to turn a farmer into a hunter. It's not working. We finally got her to understand that if she simply takes the farmer and turns the farmer loose on more of the accounts that the company currently has, that she's going to be able to free up other people who actually can be hunters to go out and get more business, or free herself up to get another hunter on the team, which is what she actually needs. One of the other things that we run into a lot is that businesses start out with tax planning. It's one of the first things they do as a business, and they get stuck there. And then they are focused on tax planning year after year rather than focusing on business planning. So in this case, know the cost of your tax savings. So in order to save $1 in taxes, you actually have to spend $3. And if that $3 is for stuff that you don't actually need, that isn't going to drive results in the next 3 to 6 months, you're wasting opportunity. Make sure that you do have a stair-step approach to debt reduction. So again, trying to get out of debt rather than trying to all at once, rather than stepping your way out. Building up cash steadily and isolating cash drains is part of that shift from tax planning, which is willing to drain out the cash, to business planning, where you're actually building up cash that will keep the company safe. Build a plan for expansion and know when to do it at the right time. So, and make sure that you are following a proven method. I mentioned this earlier, of doubling revenue and tripling profit. When you do tax planning, you tend to get stuck. When you do business planning, you start contributing to the future of the business. One of the things I do recommend is that you stress test your 90 to 180-day cash. Take a look at how strong it is, what's going to happen. If you don't know how to do that, get someone to help you with it. And then also differentiate between short-term wins and long-term gains. When it comes to the next section, we're going to talk about seeing the business future. Clearly, this is where business owners get stuck. They oftentimes fear sharing financials, and the teams end up working in the dark. The accountabilities are unclear. Things keep getting escalated to the owner. Team doesn't understand or can't follow the owner's lead. They misjudge income and profit. payoff cycle timing. They overestimate close ratios or are way off on sales targets. I'm building up a list here. I hope I'm not overwhelming you, but this is the kind of stuff that we see when it comes to seeing the future clearly. So you want to make sure that if you're overestimating close ratios, you're wasting profits because operations can't keep up, or is overgeared, or you don't understand how to react fast enough. These are the things that we can help you work on. And also, if you're afraid of change, whether it's personnel, clients, vendors, directions, this is a very common challenge for business owners and something we can help you work through. So when it comes to seeing the future clearly, one side of the picture is teams. Make sure that you're demanding accountability. Help employees drive opportunity by giving them information. Most business owners fear giving their employees information about the net profits of the business. Let me tell you, employees have already taken their guess about how much the owner is making, and they're way off on the high side 99 times out of 100. It helps employees to know what they're going to do if they know what the picture is and they know what the goals are. So also make sure that you're consistent with who does what and who reports to whom and how to report on information. When you're building teams, ask teams to meet regularly, clarify what they're doing, explain what they're doing within the team and to other teams. Assess the employees, the vendors, the customers, the products and services, and put someone in charge of recruiting and retaining talent. One of the biggest traps that I see business owners getting into is they're afraid to make a change because they don't have replacements in mind. Recruit constantly. And then as you're recruiting, look out for the opportunities to shift from multitasking generalists, which is what happens as the business starts and in the early stages, to specialists who are expert and may even know more than you do. Make sure that you understand you can't do it alone anymore. To keep growing, you know people who know as much or more than you do, and you're going to need to add that talent to your team. On the structure side, make sure that you start now to get ahead of the year-end scramble. So I'm glad you're here. I'm glad that you've dialed into this webinar. Use what you're getting in terms of knowledge here and get going immediately. Define what performance should look like. Make sure that you're documenting everything, linking processes together. So how we do something in sales, how does that translate to customer management and operational delivery, for example? Employ a rule of speak it, write it down, play it back, and use that rule over and over again. That's how you get to high delivery. And if you don't have the system to do it, come talk to us and we can help you put it in place. Make sure that both sales side and operations side can gear up and gear down. And when I say sales, I mean marketing as well. So sometimes you have to deliver a lot and push it into the pipeline. Sometimes you have to slow it down. Operations may have to step up. They may have to step down. Make sure that you can manage the expenses and the challenges of doing that. Hedge your bets with conservative estimates. What I see a lot of times is that teams are overestimating what they're going to be able to deliver. So make sure that you're encouraging your people to not be heroes as they make estimates, but rather hedge their bets. And then use short and long-term goals to explain what you're trying to do and then to measure progress as you go forward. When it comes to building a team to manage the big picture and mastering the details, I would take one thing that you've learned today and apply it. So build an informed, qualified team, strengthen your sales approach, use marketing to fill the pipeline, set challenging goals backed up with a plan, get your finances organized, learn how to use facts to plan or spot holes, evaluate your products, services, customers, vendors, learn how to create opportunity with acquisitions. And keep in mind, if you have to touch everything for it to get done, your business isn't scalable, it's owner dependent. The shift is about building a team that can think, act, and solve without needing you in every meeting and in every decision. So start working on building that now. As you look at this list, write one thing down. What is the one thing that you're going to apply as you go forward starting today. What are you going to work on? And if this seems like an overwhelming list, start with one. If you're not sure where to start or you're not sure how to tackle one of these things, come and talk to us. We would love to have a conversation with you. So in terms of ways that we can help, we're going to wrap up here. You can sign up for your mid-year check-in. Where are you and how does that apply to the rest of the year and to your 3-year plan? You can request our financial checklist. You can discuss your short and long-term goals with us, join our email list, book a strategy session with us, and register for the next webinar. Those are things that we would recommend you think about doing in order to make progress quickly. Now, at this point, let's talk. What's on your mind? We've covered a lot. We know every business is different. What questions are coming up for you? Now, I hope you've dropped questions in the chat window. If you're taking a breath now, go ahead and drop a question in now, and we're going to shift over to Robin and ask her to tell us what she's got for some questions. Think about this as your time. Let's talk through what's really going on in your business or just where you're unsure about the next step. I'm going to turn it over to you at this point.
All right. I have a couple questions. The first one is I've been running my business for years, but I still feel like I'm winging it financially. Where do I even start?
Oh, so as I said earlier, you need to build an overall understanding of the business. What's the size that you're at? Where do you want that size to be in 3 years? Use things like an ideal growth rate. 15% if you're under 2 to 3 million, 10% if you're in that 3 to 10 million dollar range, maybe slightly below 10% if you're over 10 million. But keep in mind, if you're not growing faster than 5% year over year, you're not going to stay ahead of inflation. So what you want to do is grow fast enough that you can keep up with the growth, but not so slowly that you're going to get overrun by inflation as time goes on. Then as you build that 3-year plan, that's going to define what you're going to have to deliver 3 years from now, and use that to talk with your teams of people.
Great, thank you. Um, the next one I have is our business is profitable, but growth has plateaued. How do we break through the next ceiling?
That's a great one. So the first thing I would do is I would quickly do some evaluation, if you haven't already, on customers, markets, geography. Where are you strong? Where are you weak? Where are you tapped out? So one of the things that I think business owners often do is they stay in a market too long, or they try and grow too big in a given market, and they end up with a bullseye on their back with somebody else coming after them. So if you've identified that you're really maxed out as much as you can, then look at acquisitions. Now that's an entirely different kind of game. I would get help. If you want some help figuring that strategy out, let us know. We can talk you through it. And when it comes to acquisitions, these are great opportunities to make a leap ahead, especially if revenue or growth has been flat for 2 to 3 years. There's probably several areas that are flat. It could be customers, it could be products or services, it could be geography, it could be opportunity to add additional talent to the team. And all of these are reasons to do acquisitions, but you need to make really clear about what it is that you're looking to do. We talked with a client yesterday and their management team about doing an acquisition, and the original names that went up in the list changed dramatically as we talked about the reasons for doing the acquisition. And we shifted from getting someone who was good at doing what they were already good at to someone that could bring in an entirely new mindset and an entirely new marketplace to the business.
Perfect, thank you. You touched on this a little bit, but the question is, should my manager see financials? And if so, what's appropriate to share?
in general, I believe that the managers need to see a lot about the financials. So you want to scale this from top to bottom. I would not worry as much about them seeing the profitability of the business as I would. I would actually worry about if the business isn't profitable, scaring them on what might happen. So you want to be a little bit careful, actually, more on the downside than on the upside. In terms of showing them what's going on, they need to understand revenue, they need to understand the gross profit margin, they need to understand the cost of overhead, they need to understand what the demands are for net income. So here's what we have to pay off in terms of loans, here's what we have to build up in terms of cash, here's what we have to pay in taxes on the profits, here's what we have to invest in the future of the business, so our CapEx budget. And all of these things will help them better understand where they can play a role and what's going to happen as the business moves forward. I would share more rather than less. I would say I would get a dashboard that turns numbers into graphs and helps make it more explainable and more visual for your team.
Great. We have two more questions, kind of along the same line. What's the best way to get my team thinking about growth and not just about doing the tasks related to their job?
So I think you want to, I don't know how big your team is, but I would actually look at it in layers. So who are the people that are most likely to be your future leaders of the business? And then underneath them, who are their backups? And then who are the backups for those people? So starting to build an organization chart that is today, and then build an organization chart for the future. And what do you have to add to that organization chart? And how do you grow the talent that you have today into that future organization chart? I would say that most businesses are not clear enough with their employees about opportunities to grow. So they don't go, we have a client right now who does surveys every 6 months of all of their employees. They stick it in the paycheck so they know it gets to the employee, and they ask them, what would you like to learn about? And they give them a checklist and then a couple of blanks that employees can write in other things. And it gives them great information on where employees want to grow, who to focus on for what, and how to build training and development plans for the future. Then in terms of your management team for the future, you have to look at, do I have leaders in sales, finance, marketing, operations, human resources? Where are the gaps, and do I fill those gaps with external resources? So I hire a contractor versus internal resources, either someone that's on the team now, someone I need to hire, someone I need to add to the team or grow onto the team.
Great, thank you. And then our last question um, is how do I figure out if my customers are actually costing me money?
Oh, great question. And you need to do this customer by customer. We had a client when we started with them, it was just the whole bucket of customers. And as we segregated and isolated each client, and we got a handle on cost of goods sold, which he had no clue about when we started, we actually were able to understand the customer's ability to contribute gross profit. Those customers that were under 40%, which is just a deathly place to be, and those customers that were much higher margin once we delivered the product or service. Then we also had to look at the overhead and how many customers we had and what each customer needed to contribute in order to pay for overhead and profit. So breaking the picture apart by customer and then setting some metrics, what we need from each customer as a minimum contribution to overhead and profit, helped us to measure which customers were driving forward, and also go and talk with customers about, we're going to have to do a price increase here, because if we don't do a price increase, we're not going to continue to be able to service you in the same way that we have serviced you up to now. And being willing to have those tough conversations conversations was also then backed up with a new customer recruiting program where we were bringing on customers at a higher margin because we now understood what was the criteria for a good customer, what made good customers happen, and we were out on the hunt for those. And we had a bunch of those lined up, which made it easier to have tough conversations with the customers who weren't cutting it.
Perfect. And that's it for today.
Okay, great. Thank you all for coming. I really appreciate your being here. In terms of how we can help, there's a raft of ways that strategy leaders can help you, figuring out where the value is, brainstorming, creating wealth, preparing for the next generation. We'd love to have a conversation with you at no obligation. And please send us a chat, send us a request, line up a conversation with us. We'd love to talk with you. I love talking about all the ways that people go to work making money in their businesses, and I'd love to hear about how you're doing it in your business. And Robin feels the same way. Please come and book a strategy session. So follow us on LinkedIn, subscribe to get updates. You built the business, now let's help you lead it forward. Thank you so much for coming today.
Thanks, guys. Bye.
Bye.